So, my friends, my name is Mirza Catic, and today's session I'll be taking us through my trading goals for 2024. I'm excited for 2024. It's a year where rates are projected to be lowered, and that could, keyword could, be the positive drift, i.e., the tide that lifts all boats. So, something that I've been reminding myself every single day is to not miss the forest for the trees. One of my biggest blunders in 2020, 2021 is I was so micro focused on the intraday environment, on let's say scalping, on positioning myself as big as I could off the open. I was very big into playing opening drive at the time. So I was looking into pre market action, building out ratios and correlations, getting into, 10, 15, 20 contracts, let's say, of something on the dip off the open after it just gapped up on some news, the market's gapping up, etc. That's where my focus was at. And I did well in the environment, but for what the environment gave, I severely underperformed. So going into this year, that's a reminder, first and foremost, to myself is that, hey, Mir, I speak to myself in the third person. It's a technique called cognitive distancing. And I'm like, hey, Mir, this year, when something deserves to have space, when you deserve to get into a position, build into it, and step back and risk open profits to let it work, let it do that 1, 2, 3, 4 day trend, I need to do that. That is the part of my current evolution as a trader is I need to capitalize on those longer time frame moves because if all I'm doing is trading on the intraday and let's see, let's come over here. Let's hide this. Move level 2. I'm trading on the intraday, but we're getting moves, let's say, in the markets that are like this, that are straight up, where possibly the most fruitful trade was a simple buy and hold across multiple days. I don't want to miss out on that again, right? So I don't, essentially, what would be happening to me is I would ping day one of a move well off the open the first 15 minutes. Day two, I would give some back because it's gapping up a little bit. I'm trying to buy a dip to pre-market low. It flushes me out, etc. I'm red, no entries for the remainder of the day. Day three, maybe I scalp the open again, etc. Day four, same thing. So net net, I came out green and I was under the perception that what I was doing was appropriate and that I was trading well. But when I look back, it's like, wow, this name made a 20% move on the equity in the last week or two. And I capitalized only on a fraction of that on options. I would get in on an SPX contract at 2, sell at 4, and I'd be like, "Wow, Mir, like this is it, brother. Like you just got to keep doing this and you can be neighborhood hero, you can save your family." And then, the contract I bought it at 2, sold at 4, the contract closed at like 45 at the end of the day. End of day I'd be practically crying cuz I'm like, what is keeping me from being a trader and holding this and holding it for the gap up in the continuation. So that's the biggest thing is don't miss the forest for the trees in this coming year. And I'll kind of go into how I'm practically applying that and what I'm doing differently and the scans and stuff that I'm using in a little bit. And the second part of the first part of my plan of don't miss the forest for the trees is not avoiding the traditional finance either. So things like 401k, Roth IRA, treasury bills. I've been learning a lot about life insurance policies and how you can leverage those intra life, not just after death, to finance things like homes, cars, etc. And then real estate too. All of those things can be traded. All of those things deserve participation, to a particular degree, whatever your portfolio risk tolerance and experience in those domains allows for. But those are all things that a past version, a younger version of myself, did not prioritize. And over the past few years, as I have been prioritizing them and I'm seeing the fruits of those seeds, start to come to me, I'm becoming more and more aware of the fact that, hey, there are plenty of other ways to get wealthy. It doesn't have to directly be a result from my trading account, because the end goal, that's what the end goal is. I feel like for everyone, it's we're we're trading because we're interested in the markets, we like it, etc. We maybe like to code, so we're building out indicators, whatever it may be. But ultimately, we're doing it to make the money to be able to live the life that we want to live and to extend that courtesy out to our close friends and family, and then eventually the greater community. So, an evolution for me, a bit of maturation has been, hey, Mir, even if you don't get exorbitantly wealthy in the next 5 to 10 years as a direct result of your trading, you can still be an extremely wealthy man in 10 years if you play all the other parts of finance correct, or well, rather, that you've learned how to do as a result of, thousands and thousands and thousands of hours participating in the markets. I have like what, 10, 12 rooms open throughout the day. I'm listening to people constantly that have 15, 20, 30, 40 years of experience. Like, this is the environment that you want to be in, to be able to scoop up all that additional information that's going to make that net positive gain outside of your trading account as well. So that is the end, I guess, of that first part. It's a holistic approach, but it's something that I no longer am willing to forego. The second part is, I've been for the last couple months dollar cost averaging into some crypto, and I plan on continuing to do that more aggressively into the new year as well. So we can pop onto a larger time frame chart of Bitcoin, and we'll look at Ethereum as well. I believe I had the squeeze on the other chart, but we can pop it up right here. So Bitcoin and Ethereum, they're both in daily squeezes right now. I'm not as concerned about trading them technically as I am simply just positioning myself on a longer time frame horizon for these to capitalize, let's say, on some positive drift for them from rates coming down, speculative assets potentially getting some more love, increased adoption. I believe there are some big SEC decisions coming up here in the next week or two regarding some ETFs that could be coming out. I could be wrong. I could be quoting the incorrect financial instrument, but there is a lot of buzz around that. A subsect that I'm a little bit more interested in with getting into crypto, and particularly Ethereum, is crypto gaming is on the rise. We have an entire ecosystem of crypto games that are being built out on the blockchain, and intra-game, those in-app purchases, or in-game purchases rather, they're being used with, let's say I'm taking my Ethereum and exchanging it for that game's particular coin to buy in-app stuff. And the way games are being built out now, particularly, with VR and whatnot too, is that some of these games might be so colossal that they within themselves are going to start developing their own micro economies and micro ecosystems that will ripple back out into these other, larger cryptos like Ethereum, like Bitcoin, and other ones. I'm not necessarily focused on positioning into meme coins and just getting lucky. For right now, I'm really trying to get the bread and butter Ethereum, Bitcoin, and some other ones. And then as I continue to do research into those gaming cryptos, those are going to be the ones that then I reallocate the resources and the gains that I've built up from dollar cost averaging over time to hit those maybe more volatile couple 100% movers. So that's the plan with that, in terms of, not necessarily trading the markets themselves, but a separate financial instrument, a separate domain, some learning from other people on YouTube and in the crypto space, et cetera, to kind of accumulate that information. So Ethereum, Bitcoin, and then crypto gaming, that is on the rise, and that needs to be paid attention to, my friends. And part 3, let me actually just get YouTube up real fast in case anyone asks a question over here. Okay. And then part 3 is just me going through kind of the trading related aspect of what I want to do. I mentioned wanting to be positioned for the longer term moves this coming year, and how I'll be doing that is primarily focusing on daily squeezes with stacked moving averages to the upside. So kind of the bread and butter, simpler trading play that worked really well for me in the past and has worked for decades for plenty of our traders. So there's no reason to try and go and recreate the wheel. And how I plan on doing that is I built out essentially a scan to streamline the process, daily squeeze, stack moving averages, and I'm coming in here and I'm filtering these names. Or I'm on the weekly chart, that would make sense. I'm filtering out these names. One of the criteria being in the last 3 months, the the name had to have made between a 30 to 100% move to the upside within the last 3 month time frame. And that criteria, that guideline, is from a trader. I might butcher his name, but it's Christian Kolomagi. and he essentially is one of the best traders of our time. He took anywhere from, I think it was like less than 10K to over $100 million in his 10-year career. And this is one of the criteria to his bread and butter play, which just so happens to kind of line up with practically what the squeeze is too. So that's been something that, sometimes this list over here, the scan is this long, and then it's like you have analysis paralysis, or I would rather, and I'd be like, how do I differentiate? And it's like, hey, let's participate in these names that have already made a move up, that are already showing us they're interested in moving higher. Now they're basing, squeezing, etc. Then we go into, hey, what's the pre-market doing on any given day? Is it responding? Is the overall SPY, NQYM, are they also now trending and in a position to go higher? That's when we really leg into things. A couple of weeks ago, when the market was moving straight up, I was hitting some nice, 5, 6 hour plays, because the market was also supporting it. It wasn't just an outlier name. So that's something that is important to be aware of in tandem. It's not just about coming in here, hey, this is in a squeeze, let's buy it now. It's like, how does it fit into the larger time frame context of everything else that's going on as well? And essentially that would be that's essentially my workflow. I come in here, I click through these, identify. Hard to see the watch list, Helen. Yeah, I'm on an ultra wide screen, so it's not, the names right now aren't too crazy important. You can everyone has access to the squeeze on all platforms, the free one. And I'm pretty sure stack moving average scans are available on all platforms as well. If not, it's a quick Google and you can grab it. But just flipping through the names, identify 30%, 30 to 100% movers to the upside. And then it's those names that then I come into and sort out and filter a little bit deeper. That's for that play. So that's the larger time frame play. The last time I was on the mic, I showed you folks kind of some data sets and samples and stuff that I was doing with the PMZ and with SPY. Where is this at? So my approach, I think, going into this coming year is essentially in a broader market upcycle, which might be what 2024 possibly is. I want to play outperformers and names with a strong pre-market. I don't want to come in and trade SPY every day like I have been the past few months, right? So I want to play those names that are outperforming, that are going to give me an outlier move, even with SPY moving up. There has to be that that additional bit of nuance with the stock selection, with what's going on in the pre-market. Maybe hop into the option chain, see where they're hitting, where the volume is coming in at those further out the money options, and just get an understanding. If you folks are using any flow services, whatever that may be, you can kind of integrate that into your analysis. But overall, we want to play the outperformers. When the market is turning, let's say we hit a larger time frame supply, like we have been these last couple days, kind of off of previous all-time high. Those are the days where I would be interested in playing SPY at or below the PMZ. And the reason being is that in the past, when the market would start turning down, I would try to pick names to play to the downside. So let's say ES was up 1, 2, 3, 4, 5 days. Apple, Tesla, etc. are all moving with it, but Amazon isn't. So now the market is heading down, and I'm like, Amazon wasn't following it. Now, when the market turns, Amazon's probably going to be the one to sell. I would find myself in a precarious situation where now the market's selling, those leaders that were there are slowly selling off. I don't want to necessarily short the leaders, but the name that didn't move up with the market isn't also necessarily selling off with the market because it wasn't getting accumulated in the first place. So then I would miss a clean move on SPX, let's say with options, that offered me an incredible amount of leverage because I was trying to go out and pick a name versus just trading the index itself then on that move down in a broader market upcycle. So specific names, outperformers to the upside, just keeping it simple, trading SPY to the downside. And then the third part of that, it's a little bit on the exploratory front, but you folks have seen Omer. He's in the chats, he's a moderator, etc. He is a trading mentor of mine, and we've been good friends for a long time. He is in the small and mid cap space, and he has, opened the doors up to me to come in and learn that space as well. He has a ton of friends at the highest rungs of the trading journey that we're all on in the proprietary space and in the retail space. And a lot of those guys and gals, they are trading these names. They're trading those names that, let's say, are gapping up 300%, or that have moved 300% over 3 to 5 days, etc. And on the first red day, if it does XYZ, there's a 70% chance that it closes below prior day's close. Like they're building out those data models and executing on those names accordingly, because the edge there is the inefficiency in the price action with those names, versus, let's say, on SPY, we're deriving edge from understanding market context and this indicator and that indicator and supply and demand. Those names, I don't want to necessarily call it straightforward, but that's what Omer keeps telling me. He's like, it's a lot more straightforward. It's like, hey, if you're playing this long, you can hit a 10, 15, 20 R trade long. If it doesn't work, it doesn't matter, because on the trades that do work, you have such incredible skew to the upside. So that is kind of something that I'll be exploring as well. Also, something that I heard in the strike zone was JR mentioned that smaller companies benefit the most from lower rates because they can borrow more and leverage up faster, thus providing more explosive moves. I was under the impression, like, we're all familiar, tech benefits from lower rates, etc. But that was an additional bit of nuance from him that kind of lines up with, let's say, wanting to learn from the small mid cap space with Omer, that can come into this year and potentially find ourselves in a nice hot cycle. So that is those are my plans, my friends, for 2024. I'm extremely excited. The goal is to overall get wealthier across the board, all the different accounts, investments, portfolios, side hustles. A ton of my friends are coming of age and starting businesses and growing businesses that they've had. So it's time to, like, get into those, assist with them, invest in those. Like, there's a ton of cool and exciting things going on that isn't, just on this chart right here in front of you, that I think overall will make me a better trader. Do I know what is the most popular small cap ETF? I don't, Nan. That's honestly a better question for Omer. I don't think he necessarily IWM. Yeah, I don't think he necessarily trades ETFs at all. He'll he'll be trading these names that he shows me, and some of them are good, but some of them I'm like, dude, what is going on here? And it's just a matter of having that exposure, having the reps, and being able to execute on it, because he's a very big trader. I'm trying to hype him up, so I want to get him in here a lot more, and I'm excited for him to get in here a lot more, and for you guys to pick his brain, because then that's time that I also get to you know extract more information from him. So yeah, what is your guys' main goal, guys and gals? What's your main goal for 2024 in terms of trading? Is it a dollar amount? I try to stay away from picking dollar amounts, more so strategic plans that I can kind of build around and execute upon. What are you all feeling? Stop losing money. Yeah, no. I mean, that's a solid goal. That's a base goal that needs to just continue from year to year, is to stop losing money. A part of that also is just like I was kind of harping on about, is just making money elsewhere. That's one thing that I didn't write that I actually want to touch up on towards the end of my session, is the psychological aspect of trading. I let it get the best of me a little bit this year, and not in terms of like my performance per se, but just when you're investing so much time, like before the market, staying here the entire market, after the market, tagging, journaling. I was spending an hour, 2 hours reviewing my screen recordings, etc., missing dinner with my family, not spending time with my lady, etc. When you're putting all that time in, and then you don't feel like you're proportionally being getting paid, you don't feel as if you are getting paid out in proportion to the work that you're putting in. That is what really wreaked havoc rather, on my mental. And that's something that I need to reorient, because my sister had came to visit from med school 2 times in the last like 2 months. And for the time that she was here, I just realized, I was like, dude, you were sad like a lot of the time that she was here, because you were so invested in your trading, and not in like the good and healthy way. So in 2024, it's about making money elsewhere to be able to orient and focus up the resources that I do have intra trading, to then make the most money I ever have trading as well. So that's a big loop around non focus on other ways to make bread, and hopefully trading will also come as well. Send a link to the scanning videos. I'm not exactly sure what you're talking about, Mike. We have a ton of resources on scans and different scans. There's a simpler scanner, so you don't necessarily have to do any of the dirty work. Speaking of that, I did want to pop this in here. We are still currently having a New Year sale, up to 30% off on a lot of things. The two indicators that I mentioned that I use the most is the Squeeze Pro, that is on sale, as well as the PMZ Trendy Johns indicator. That's a pop-in indicator, and that is also on sale as well, my friends. So something to kind of capitalize on if you're out there shopping for some additional edge. But yeah, other than that, I don't really have anything. I think I really covered it. Don't miss the forest for the trees, dollar cost average in a crypto, subsec crypto gaming, trade related stuff, daily squeezes, stack DMAs, spy PMZ play, small and mid caps. And then the final thing is the psychological aspect of, not allowing it to deter your mental environment to the point where it's no longer fun or fruitful. So with that being said, my friends, in the next couple of days, I'll be in Utah with my buddies, Park City, snowboarding, skiing, etc. So I'm super excited for that. If anyone is, tearing up some powder at the same time in Park City, you can email me and we can link up, talk trading, do whatever. But that is it for my session, my friends. I appreciate you showing up, appreciate you giving me the platform to speak my mind and conversing a little bit about it. And I imagine I'll be back soon. Thank you so much. Bye bye.